Eco Money on Money FM 89.3.
You're listening to Eco Money on Money FM 89.3. I'm Rachel Kelly. Now, what did you have for lunch today? And have you ever stopped to think about how that produce got on your plate, or even what the investment potential is of your favorite snack? I'm talking about investing in the $10 trillion global food industry. It currently feeds a population of 8 billion people. But with the global population expected to expand to 9 billion in the next 15 years, the size of the industry is understandably going to grow as well. On the flip side, though, existing food production practices account for a third of global greenhouse gas emissions, 70% of fresh water usage, and 80% of deforestation worldwide. And let's not forget that geopolitical instability, protectionist government policies, and unpredictable weather events have also fueled a global food crisis. So needless to say, investors are increasingly having a closer look at investing in a resilient food system. But that said, according to the latest AgFunder Global Agrifoodtech Investment Report 2023, global agri-food-tech funding in 2022 came in close to 50% lower than the year before. To help us get a better understanding of what is moving in the industry, I spoke with John Friedman, Asia Director of AgFunder and Grow Accelerator. I started off by asking him whether or not the slump that we've seen in investment in the sector is mainly due to the macroeconomic environment and market factors, or whether there are other issues at play here too.
I don't think any tech sector was really immune from this funding pullback that we saw in 2022. Obviously, this came off of a record-breaking year in 2021 on all accounts. Agri-Foodtech was very much a beneficiary of that upswing as well. When markets corrected, Agri-Foodtech was certainly not immune. I think to your point, though, there was definitely a number of idiosyncratic details at play within the sector. I think the most important one to mention is this pullback that we've seen in Chinese VC activity last year. Comparing it to 2021, Chinese deal activity accounted for over 10% of 2021's investment activity in agri-food tech. You can point to a number of sort of downstream e-grocery, food delivery type massive deals. We're talking $1 to $3 billion fundraising deals individually in China, but that was pretty much just gone from 2022. So it definitely took a lot of wind out of the sail.
And taking a look at some of the other key insights from the past year. While there were no mega deals in 2022, funding did increase in the ag-biotech sector. That's bioenergy and biomaterials, farm management software, and IoT. On the flip side, though, funding declined more than 35% for meal delivery, e-grocery, alternative protein, cloud retail, and midstream technologies. It seems there's an increasing shift in investment in upstream technologies.
Well, the past 8 years, since 2014, we've seen companies operating towards the consumer end of the supply chain, or what we call sort of downstream. They've traditionally received a lot more attention, and as a result, investment dollars than technologies being applied closer to the farm, or upstream technologies. In 2021, that funding ratio was over 2 to 1, meaning for every $1 of investment going into upstream, roughly $2.10 was being invested into downstream categories. And you could sort of point to, obviously, the sort of reliance on online deliveries and solutions that were geared more towards the consumer, especially coming out of lockdown. All these sort of technologies and platforms received a lot of attention and investment interest through sort of 2021 and prior to that. Now, last year, we've seen this significant flip with upstream technologies within the agri-food tech space. claiming over $15 billion of investment versus under $12 billion for downstream. So there's been this sizable shift between upstream and downstream, which we haven't seen for many years. Once again, China market has a large part to play here.
Another key trend in the year ahead, John says, is the combination of food tech and tackling the climate crisis. And that said, have you thought about the environmental impact of the food you consume on a frequent basis? Well, the BBC has a climate change food calculator, and I'm going to give you an example. So if you like avocados and consume them perhaps once to twice a week, according to the climate change food calculator over an entire year, your consumption of avocados is contributing 15 kg to your annual greenhouse gas emissions. That's the equivalent of driving a regular petrol car 64 kilometers. Your consumption of avocados also uses 3,519 liters of water. That's equal to 54 showers lasting 8 minutes each. Why does all of this matter? Well, as I mentioned, in the world of agtech, John says that there's an increasing focus on combining food security with tackling the climate crisis.
The theme that we've been talking about is this kind of intersection between food and climate. I think that's always been an important one for us to explore. The fund which we've raised and are deploying from here is predominantly focused on impactful solutions to create sort of quantifiable change both environmentally and socially through the lens of food and ag. And so when we sort of expand that into climate, we're looking at carbon sequestration and mitigation technologies, for example, in industries as fundamental to Southeast Asia as rice farming. So whether that's on the field or sort of post-harvest processing, there's so much that we can be doing, which actually quantifiably changes this sort of carbon emission scope, which everyone needs to be focused on and thinking about as we sort of race towards 2030 and beyond. Another theme which we spend a lot of time looking at is food as medicine. Again, this sort of intersection between what we're putting into our bodies and how that manifests, and the sort of long-term benefit for bodies and society as a whole as we age. I think that's a really interesting space, and one which is highly important in Asia, just given the sort of rapidly expanding consumer market surrounding us.
So we've spoken about sectors and how investment trends are shifting. But what about geographically? The report also highlights a decrease in investment from China, but we are seeing an increasing number of fund flows into Africa.
It's great to see more of these emerging markets and sort of less developed ecosystems maturing over the last few years. I mean, here in Singapore, where I'm based, and Southeast Asia as a whole, it's a prime example of how quickly the Agrifoodtech sector has evolved over literally the last 3 to 4 years. I think we should probably have to point out Africa's share definitely doubled in 2022, although it still accounts for a rather thin slice of overall investment dollar, barely sort of 2% of total funding raised in 2022 across the globe. Compare that to a market like the US, hands down largest technology, market and continent as a whole, and certainly within Agrifoodtech, that's no exception. So the US accounted for over 90% of North America's total, which as a region accounts for 46% of the global total of investment across global Agrifoodtech. Asia's funding was down almost 50% year on year. That includes, China, but also India, which again sort of saw a general reduction across the board. Actually, there was no market which did not see a reduction in funding. Might as well just point out within the region closer to home, Indonesia is definitely the leader in Southeast Asia. It's the only country in our region which makes it into the global top 10 with about $700 million of investment in 2022. That was down about 12% year on year, but still good enough to claim a number 9 spot on the global list.
So which categories will bring in the most funding in 2023? Well, artificial intelligence was the most mentioned category, with more respondents applying that to robotics and automation on the farm, particularly in light of macro headwinds for labor and inflation. The report also highlights that biotech is popular, from GMO to biofertilizers and biocontrolled products. Some respondents still think alternative protein and vertical farming will bring in the most amount of funding, albeit less than previously.
But in terms of, what does the market look like in the year ahead? It's a great time to be in Agrifoodtech. We've seen an important correction in terms of valuations and growth expectations to a level which is perhaps arguably more realistic in terms of an industry which is driven by atoms instead of bits. Fundamentally, these companies which we're investing in still scale at a different pace and acceleration compared to a pure technology or software company. And I think, there was perhaps a little bit of overexcitement in recent years in terms of, certain segments, in terms of food technology, when sort of generalist investors were starting to pile into ag tech and food tech. Fundamentally, it still remains a highly important sector for us to be to continue investing in and driving innovation. I mean, again, fundamentally, we need to rethink how our food system is operating, from first principles of production through supply chain and distribution, all the way down to the products that we're consuming. So don't get me wrong, I think it's a really important space.
That was John Friedman, Asia Director of AgFunder and Grow Accelerator, and you can find out more about AgFunder at agfunder.com. I'm Rachel Kelly, and you've been listening to Eco Money on Money FM 89.3.